Welcome back to the Commercial Real Estate Show. I'm Michael Bull. Thanks for being with us. Today we're talking about the multifamily market in the U.S. Please welcome my next guest, Phil Tague. He is president of AMLI Residential. He's also chairman of AMLI Development. AMLI has 20,000 apartment homes across 9 U.S. markets. Thanks for joining us today. We appreciate you being in Studio One.
Thank you, Michael. I look forward to it.
Well, Phil, we've heard about the market from the analysts. They always do a good job, but it's also interesting to see someone who's actually on the front line who owns these properties. You guys have a lot of units around the country. What do you see for 2014? How did it wrap up?
Well, this has been the golden era of apartment ownership over the last 3 or 4 years. We have regularly exceeded 5% on revenue increases and NOI increases north of that. And I don't know that in my lifetime we're ever going to see this period of time again. We're projecting in 2015 similar sort of 4 or 5% rental increases, NOI increases in the same range, if not a little bit higher. Some expenses are going up, obviously, real estate taxes, utilities in particular. But this is the golden era for apartment ownership.
Wow. So you really expect this to continue into next year and the year after? How long is this going to last?
I don't know about the year after, but I think it's going to last through 2015. We are in 9 cities, as you mentioned. One of them happens to be Houston, which everybody now treats as toxic material. And so far, it has not shown up in our numbers, but obviously it's early in whatever the fallout is from the oil plunge.
Right. Well, yeah, you have the people in the oil business, but you also have the consumers who have more dollars in their pocket, right?
Yes, that's absolutely true. We're rooting for the consumers. We're rooting for the millennials to earn more money.
Okay. And let's talk about prices. You guys own Class A apartment communities all over the country. What are you seeing for prices out there when you're acquiring or selling properties?
Similar to what I said operationally, this has been apartment developers and owners who have sold properties. They've reached for the holy grail over the last few years, and particularly developers have achieved margins in some cases of 100% over their cost. Wow. And AMLI, we didn't reach 100%, but we achieved margins in the 30 to 75% range on all our development activity, which is really unparalleled, at least in my 35 years of experience. Typically, the margin that is achieved is about 15%. So I don't expect this to last. Obviously, it's been partly due to these hefty rental increases. When rents or revenues are going up 5% plus in a world of 2% inflation, that looks very powerful for investors. But I don't expect this circumstance to continue. But I still think that there'll be a relatively healthy, normal margin in apartment development in at least the next couple of years.
Yeah, these are the Snoopy dance times, right?
Yeah, exactly.
Well, who do you see that you're competing with or that are buying your properties when you're selling them? Are these U.S. REITs? Do we have foreign investors? Who's really active buying these communities?
Well, coming out of the recession, it was a lot of opportunistic people with capital, and then the REITs shortly followed because they were relatively well capitalized coming out of the recession. It's now transitioning into other capital sources, including collections of individuals, some of the so-called TIC buyers, tenants in common buyers, and we're seeing various sources of foreign capital start to compete aggressively for apartments, including Chinese capital and other South Asian countries. In some respects, that's a little worrisome because you think back in the late 80s with the Japanese buying a real estate at the peak in the U.S. and more recently Russian buying perhaps close to the peak back in the early part of the last decade. So it remains to be seen, but there is now a lot of foreign capital chasing apartment communities.
And share with our listeners and viewers, if you will, some of the cap rates you're seeing on these Class A properties.
It's almost embarrassing. They're so low. But in coastal cities, New York, Boston, Miami, LA, San Francisco, Seattle, they're sub 4 in a lot of cases for Class A high-rise property. And it is just remarkable how low they have sunk. And even with Class B and Class C apartments, they have compressed a great deal. Class C apartments, I don't think you can buy them for a cap rate of 6 or greater than that. I think they're in the 5 range. And Class B often is in the low 5 to high 4s, depending on which city you're in.
Yeah, it's a great time. And with these types of returns that you're talking about, these type of rent increases, obviously it's been time to build. Tell us what you guys are doing in the development world.
We're making a big bet and have been in the last several years. We have over 3,000 apartment units in production right now, in some stage of production. It's about $2.5 billion of capital. We are not alone, unfortunately. There are hordes of other people, including non-multifamily developers who have launched projects across the country. And it still seems to be at a fairly restrained level of about 400,000 to 500,000 new starts. But unfortunately, almost all the new starts are in the best 2 or 3 submarkets in each of the major cities. So it's not spread out as much as it used to be. And so that's a little worrisome.
Yeah. Well, I tell you, when I talk to the analysts around the country, they seem to indicate that, with the millennials and with the housing market and with student loan costs and, you just go on and on. It seems like there's just multiple reasons why this market should continue to be robust. And I don't blame you for going out there and building today, especially with the types of returns you're talking about and the financing that you can get. The cost of money is so low. It's a great time. Well, stay tuned. We're going to take a short break. When we get back, we'll talk about some of these new communities, what's hot in these new communities, and what should we expect moving forward. I'm Michael Bull. This is the Commercial Real Estate Show. We'll be right back. The Commercial Real Estate Show is brought to you in part by your friends at Bull Realty. When your business requires proven performance, visit bullrealty.com or call 800-408-BULL. Welcome back. I'm Michael Bull, and this is the Commercial Real Estate Show. Today we're talking about the apartment market, multifamily properties in the U.S. Phil Tague is my guest. He's with AMLI, and you guys are building. How different is a new community today? I think some people may not realize how the new communities are being built and some of the amenities that they have.
Well, they've all been ratcheted up, obviously. Mm-hmm. For example, in the interior of the units, quartz is king. Everyone's putting in quartz countertops. Mm-hmm. Granite's kind of become passé, larger cabinets. Cool technology, Bluetooth speakers in the walls, nice. A lot of Nest thermostats. Trying to keep our residents connected as what they prefer, and they prefer contacting our leasing office via social media rather than walking in and actually interacting with our people. So we try to accommodate that. I think on the amenities side, you're seeing some unusual things such as bowling alleys, small bowling alleys, couple bowling lanes, basketball courts have been resurrected. There are lots and lots of wired big screen TV cabanas that are around pools now. And we have the best spas in the U.S. in our apartment communities. Of course, it's for dogs, not for people, but our spas for dogs are outstanding, and not unexpectedly, our residents want them because about 65% of them have pets. Children are passé, so pets are who lives in the apartments.
Well, that's interesting to hear because I think even myself, I don't think I even fully realize how many people really have a pet. And if you shun tenants with pets, you're losing out a big part of the market, aren't you?
Absolutely. Yeah.
So
I think the other thing, Michael, that we've concentrated on as a company is having all our apartment communities designed to be LEED certified, mm-hmm. which is not doesn't typically matter to our prospects, but I think over time there's a slow building up of concern about what real estate community is doing to the environment, and I think this is something that's somewhat helpful and will over time play to the intellectual desires of our residents.
Yeah, well, that's a good point. And also I think the cost savings for the tenants can be important. I know I grew up in the apartment management business and have always sold apartments, and a lot of the tenants would ask me when I was a young leasing guy, well, how much my utility is going to run. So obviously there's savings there. And then when you're selling these properties one day, when you're building nicer, newer ones and you're selling them, the investors are going to like that LEED certification, aren't they?
That's absolutely true. And the other thing is that it's a healthier unit. Low VOC items, typically they're non-smoking communities, so people with asthma and allergies like the apartments as well.
Yeah. Tell us a little bit about the math, about the supply and the demand for apartments.
Well, as I said, demand remains robust. The way we look at it, last year in 2014 and projected this year, country is going to create about 2 million plus jobs. About 35%, each new job typically equates to a new household. Each new household needs a housing unit. About 35% of the population lives in apartments. You apply 35% to the 2 million new households, and it's about 700,000 demand quotient for units. And the country is going to produce about 500,000 new apartment units next year. So that's a simplistic way of looking at it, but I think that there is continuing to be growth of demand in excess of what new supply will be.
How about a quick closing tip for our listeners and viewers?
I just hope my fellow developers take a year off and spend it in one of those wired big screen cabanas that they're building around the pool.
Phil, thanks for joining us in Studio One today.
Thank you very much, Michael. I enjoyed it.
And thanks for joining us out there on YouTube and on the show website and on the 40 radio stations around the country. We appreciate you joining us. And be sure to join us next week. Our show will be about associations that matter. We'll talk to some of the leading commercial real estate associations and about their resources and about their training and about their networking. So be sure and join us. And until next week, be sure that you always lead, learn, and laugh, and join us for the Commercial Real Estate Show. The Commercial Real Estate Show is brought to you by Bull Realty Commercial Advisors, a great place to do business. Visit bullrealty.com. RealNex, a comprehensive and powerful suite of commercial real estate tools at an incredibly low price. Visit realnex.com. That's REALNEX. FIU, Florida International University. Earn your master's in real estate in as little as 10 months without interrupting your career. Visit FIUonline.com. Xceligent, the resource professionals use for commercial real estate information. Visit Xceligent.com. That's XCELIGENT. Commercial Search, the source to market and source available properties for sale or lease. Visit commercialsearch.com. For more information on these great companies or for additional videos, podcasts, or articles, visit CREshow.com.